Good morning. Welcome to this installment of Pro Bono Partnership of Atlanta's monthly webcast series. My name is Sarisha Gunta. I'm an attorney with the partnership, and today we have Mary Benton with us, a partner from Alston and Bird, and she'll be speaking to us about galas and silent auctions. This is part one in a series that we are presenting on fundraising options, galas, tournaments, and festivals. Oh my. We're hoping to cover some topics generally that are relevant to silent auctions and galas, but we're going to be focusing primarily on some recent changes that the Georgia Department of Revenue has provided related to sales tax and how that relates to galas and silent auctions. I want to first give you a little bit of information about Pro Bono Partnership of Atlanta before Mary goes into the details of today's presentation. Our organization's mission is to provide free legal assistance to community-based nonprofits that serve low-income and disadvantaged individuals. We do this by matching these nonprofits with attorneys at Atlanta's law firms and leading corporations to provide free business legal services. Our clients are typically 501c3 organizations based in Atlanta who serve low-income and disadvantaged individuals and are otherwise unable to afford legal services. If you're interested in learning more information about our organization or in applying to become a client, you can visit our website and our application is there. And also on the website, we have a host of great resources, including articles, past webcasts, and in a few days, this webcast will also be there. And please keep in mind that the information that Mary will be sharing with you this morning is just general guidance. If you have specific questions about your organization, please reach out to your attorney. Thank you, and thank you, Mary, for sharing this info with us today.
Great. Thank you so much, Sarisha. I really appreciate it, and I'm glad to be here and participate in this webcast. This is I think, the first of three that's going to focus on different fundraising techniques typically used by nonprofits. And the genesis, as was stated a little bit earlier, is that several tax attorneys here in town have been working with the Georgia Department of Revenue to try to promulgate a policy bulletin that will further kind of clarify how sales and use tax should be applied within the concept of nonprofit organizations and specifically with fundraising events. And so the information that I'm going to share today starts out kind of generally about the sales and use tax and its application generally to nonprofits, just kind of a background, lay the landscape, so to speak. And then we'll be talking about silent auctions and galas and sales tax associated with those. And the guidance that is provided today is based on the current draft of a proposed policy bulletin. It has not been issued by the department yet. We don't expect it to change, but it, anything is possible. But we think this, what I'm providing you is where we have landed so far. So let's get started just with a brief overview of sales and use tax. The sales and use tax is a transaction-based tax. You all know every time you go into a store and you buy something that's taxable, you pay a sales tax. The tax is imposed on tangible personal property, on certain services, although not very many in Georgia. And then for purposes of these admission events and galas and auctions, it's also imposed on sales of tickets, fees, or charges for admission to places of amusement, sports, or entertainment, and that becomes important later on. The tax does not apply to a sale for resale. This is typically done in a business context. So if a business purchases items and then are going to resell it, they can give a resale certificate to the seller and then they collect the tax when they resell that. So that is a specific exemption that is provided for in the law, generally in Georgia and throughout the country. The use tax I won't talk about a lot, except for in the context of internet sales, or as we call it, remote sales. So the use tax is a complementary tax to the sales tax, and it applies when the sales tax has not been imposed. So if you purchase something, just in general terms, over the internet, and you think, aha, they didn't charge me tax, it's tax-free. Well, unless an exemption applies, it's really not. That seller just is not required under the Constitution, basically in the Georgia statute, to collect tax from you. However, the purchaser is still liable for that tax. And you are supposed to self-report, and there's a little form that you can do that in Georgia. I don't think very many people, other than probably state and local tax attorneys, do that. But it is complimentary. It's becoming more and more common that tax will be imposed on these internet sales, just because of what's happening in the country and in Georgia, and that's a whole other story in a webcast for another time. Moving on, there are certain exemptions from the tax. The seller does not have to collect the tax if an exemption applies. However, many nonprofits, particularly when you're starting out, sometimes believe that because you are a nonprofit and you do not have to pay income tax, if you are a 501c3 or 501c4 and you have an exempt determination letter from the IRS, that you don't have to pay sales or use tax, and that is not the case. There is no general exemption from sales and use tax for nonprofit organizations. On the contrary, there are 99, at least to date, specific exemptions that are set out in the Georgia Code. And if you're really curious, it's in section 4883. It's about 30 some odd pages of text with 99 specific exemptions. And some of those do apply to certain nonprofits and charitable organizations or schools or governments, things like that. There are basically three types of exemptions. One is based on who the entity is, who's doing the purchasing or making the sale. Those would be like state governments, local governments, certain hospitals, certain health institutions, and things like that. The second is the type of use that the property is going to have when it's purchased. And an example of that could be a purchase that's used exclusively for educational purposes, or manufacturing is another one of those. If you are going to, there's a big manufacturing exemption that applies specifically to how that's used. And then the third is the product, so the type of product that is purchased. So prescription drugs, durable medical equipment, things like that. They're specifically stated as a product in the statute. So unless one of those exemptions applies, or unless you have a sale for resale, then you, as a seller, are required to collect the tax. So the tax is actually imposed jointly and severally on the seller and the purchaser, but the seller has the burden to collect the tax. Unless you get a properly completed certificate, which has a sales tax number on it, and you take that certificate in good faith. And so that means that you have reason to believe that that application or that certificate is given in good faith. So, for example, if you made a sale of durable medical equipment and you made it to, Tootsie's retail store, you probably shouldn't take that because they're probably not selling durable medical equipment. So that's what good faith means in that concept. So how does that apply to nonprofits generally? Generally speaking, unless one of those exemptions applies, all purchases that are made by nonprofits are subject to tax, and then all sales that are made by nonprofits are subject to tax. So you have the obligation to pay the tax on your purchases and to collect tax on your sales. If you are responsible for collecting the sales tax, then you should state the amount of tax on your invoice. You should collect it from the purchaser, and then you remit that to the Department of Revenue. The sales tax rate is based on a state rate of 4%, and then a bunch of different types of local rates. And so there's 159 counties in Georgia, and every county and then every city and locality is allowed to have its own tax rate. So in the city of Atlanta, it's 8.9% right now, which is the highest one in the state. But then you have, Cobb County, which is lower than that. And the rate of the tax is going to be dependent upon basically where the sale takes place, or where that property or is delivered, or that service is used. And we'll talk about that in the concept of Galas a little bit later on. So that's kind of just a basic overview of sales and use tax. And, as I said, that I've given speeches on sales and use tax where we talk about all of that, and it covers an hour. There are a lot of permutations that go on to that, but generally speaking, the main takeaway from that is that nonprofits are subject to the sales and use tax rules, and there are certain exemptions that might be applicable, but they are going to be determined by statute. So turning now to the fundraising techniques. The first one we'll talk about is a fundraising dinner or a gala. And so this is something that is very common in the nonprofit charitable world. Your organization is going to want to raise money, and so in order to do that, you're going to have an event. There's likely going to be food and drink that's going to be provided to the attendees at that's going to be complimentary to the attendees once they purchase a ticket. And you may have a program or a presentation or provide certain types of entertainment. You're going to sell tickets to that event for individuals to attend, and you're going to set a ticket price. And so on that, the question then becomes, is sales and use tax applied to basically that charge or that ticket price for the gala? And if so, what's the basis of that tax? And so here's where we've landed currently. So right now, let's have an example that will make it a little bit more obvious. So let's say the ticket is $100. You're basically going to collect tax on the fair market value of the food and drink that's provided. So you determine pretty much the same way that you're going to determine for federal income tax purposes, to determine how much is cost of goods and services and how much is a deduction for federal income tax purposes. You can use that same breakdown. And so if of your value of your $100 ticket to attend the gala, if $40 is the amount of food and drink, so that's the fair market value of your food and drink, and $60 is a donation, then your organization or the nonprofit should collect tax on that $40, the fair market value of the food and drink. And really, so we'll come back to that. So basically, if you've determined that the food and drink value is $40, the donation is $60, you're going to collect tax on that $40. There's also the issue of food that's then purchased to serve to your attendees. And if you are working with a caterer and you're purchasing the food and drink from a caterer or a vendor, then you as the nonprofit can buy that food and drink as a sale for resale. So remember, we talked about that's one of the transactions that's not taxable. So you have a resale certificate that's an ST5. It's on the Georgia Department of Revenue website, and you can provide that to your vendor or to the caterer, and you're basically saying, don't charge me sales tax now because I'm going to be collecting sales tax on the ticket price. Now, some of y'all who are really lucky, you might get food and drink donated at your event. And in that case, the caterer or the vendor who's donating that is responsible for paying the sales and use tax on that food and drink. And it's not a sale for resale in that context, so they're responsible and liable for self-assessing and remitting that. So how do you effectively calculate and remit the sales tax? And there's two different ways you can do it. One, you can say, okay, in our example, $40 is the food and drink, And so I'm going to calculate sales tax on that $40, and I'm going to collect that and add it to the ticket price. And so if you do that, let's just use an 8% sales tax, then that's, what is that, $3.20. And so you would charge $103.20 for the ticket, and you would keep the $100, you would remit $3.20 to the Department of Revenue. The other way you can do it, which is a little more complicated for you, but it's a little more seamless for your guests or attendees, is that the sales and use tax can be included within that $40 that's been determined to be the fair market value of the food and drink. So if you're doing that, you're basically making kind of a backwards calculation, and you're backing out the sales tax and the amount of the food and drink from that $40. So for example, as you can see on the slide here, we've used the City of Atlanta sales tax rate, and we've calculated that at how much of the $40 is 8.9%, and that's $3.37. So that's the tax, and then 36.73 is the food and drink. So in that case, you can just charge $100 for the ticket. You're keeping what is that, $96.73, and you're turning $3.37 over to the Department of Revenue for that. So in order to do this, obviously you have to have really good records. So you want to keep that and keep those records. And you also need to publicize how you're doing the sales tax breakdown at your event and on your website. And so you want to say that the $40 is inclusive of tax and tax will be remitted, or you want to say that it's $100 plus tax, and that you're going to be collecting on that $40 fair market value of food and drink. So you just want to be clear, and you want to make sure that that's publicized both probably on your website when you're selling the tickets, on a flyer if you're selling the tickets, utilizing a mailer or an invitation, and then also at the event. So one caveat on that, and this is something that we went back and forth with the Department of Revenue, but if entertainment is provided, and let's say it is a string quartet or something like that, you don't have to include that in the value of the goods and services that you're providing at the event. However, if it's entertainment that you would otherwise most likely pay to see, so you would buy a ticket to go see that form of entertainment. So let's say in Atlanta, Yacht Rock Review, right? Yacht Rock Review comes to Atlanta, it comes to certain venues, I can buy a ticket, I'm charged sales tax on my ticket when I buy it just to go see Yacht Rock Review. If my charity gets Yacht Rock Review to come and play, and my ticket price is going to effectively include food, drink, and a ticket to see Yacht Rock Review. So you have to collect the tax on the value of that ticket for Yacht Rock Review. Excuse me, the cap though is the amount of the ticket price. So let's say your ticket price is $100. You can't be forced to collect tax on more than $100. So in this case, let's say that you could go see, Yacht Rock Review for $25 and the food and drink is $40. So you'd be collecting tax on $65, and $35 would be a donation. If you're really lucky and you get Elton